Hi, it's Adrian here, and in this quick video I'm going to demonstrate a trading approach which I've been using as an example to teach some basic trading concepts to my kids, my 9-year-old and my 6-year-old, just to really get them started thinking about how do you trade profitably and what are the things that are important. And in order to teach kids, as you can imagine, what I've had to do is really simplify it down to the core basic principles so that they can get it and they can feel like they can own those principles and apply them. So what I've come up with for this video is not necessarily a system which I'm going to encourage you to use. In fact, I always encourage you to go through the process of testing systems and ideas for yourself, because that's a big part of being in control and confident about your trading decisions. You must know how they perform by backtesting them properly. And I teach traders how to do that in my Enlightened Stock Trader Development Program. I take them through the entire process of coming up with concepts and testing them and so on. But for this video, all I'm going to do is explain the simple rules for entry and exit that I was using with my kids so that they understood, and then when we went across to the charts, they looked at the charts and they felt like they were having some successes or getting some wins, because they could look at the charts and see when were these rules being applying, and so they would know when to buy and when to sell different stocks. So let's jump in. So the concept here is momentum and trend following. Now, momentum, if you think about the real world, is the idea that if something is moving in one particular direction, it will continue to move in that direction until some other force is applied to the object, and so it either stops or changes direction. Momentum absolutely exists in the real world and also in the stock market. You'll see here, if you just look at this chart, there's plenty of times where the stock starts moving up and then continues to move up for some period of time before something changes and it stops. And that can happen over the long term like this, which is a period of almost 12 months, or over the short term like this, which is a period of several months. And you can see that these trends or momentum moves persist for quite some time in the market. And this is an edge or a pattern which you can absolutely profit from in the long term. But the challenge is, how do you identify when it's in play? And when I was sitting with my kids and I was explaining, well, what we want to do is catch stocks, get into stocks which are moving up and hold on to them as long as they keep moving up. When they start moving down, we want to sell them, because that's when we make the money. We make money by buying something and selling it at a higher price than what we bought it. So we brainstormed a bunch of different ideas, and one of the ideas I threw into the mix for them was the idea of buying a stock that was making a new high. Now, I'm not just talking about, if we look at the chart down here, look, this is a new high point. This is another high point here. Let me just circle that. Here's another high point. Here's another high point. Now, you don't necessarily want to buy those because they're just little spikes. What I'm talking about is buying a new all-time high. So if you looked at the entire history of that stock up until now, if today it was at the highest price it's ever been in its entire history, there's no debate. The stock is definitely going up, because it can't possibly have reached that highest point that it's ever been if it wasn't going up. And to them, I could see when I explained it, a real light bulb went off, because all of a sudden they could go, yeah, right, I know, I can tell when a stock is going up. So what I've done here is I've created this little advisor which will show on the chart. It'll show you where these highest closes are. I'm just going to clear some of this other muck off the chart, so we're going to clear. So what I've done is create this indicator which puts a little green dot whenever the closing price is the highest it's ever been in its entire history. So let me just zoom out. I've gone quite a bit back in time because I want to demonstrate how valuable this can be. This is a stock that a lot of people will recognize. It's Blackmores. It's an Australian vitamin supplements sort of company. It does various other things as well. Now, if we look here in this center period of the chart in 1998, forgive me, you'll see here the first time it made a new all-time high was on this day here. So at that point, you could have bought it hoping that it was going to go up. Now, it kept going up for a little way here and then started to go down again. Now, you may have been able to make some money out of that move, or maybe not. Now, the other key principle I've been explaining to my kids is that you don't have to make money on every trade. All you have to do is make sure that you make more money in total than you lose. So it's okay to have plenty of losing trades. That's fine. You just got to make sure your winning trades are big. And that's one of the reasons why this idea of buying when the the stock gets its new highest all-time close is really powerful, because it's going up, and chances are, or there's a good chance that there'll be a big move in the near future. Pardon me. So that's the first example of where that came into place. Second one is over here. So we've got a new all-time high, and then the stock continues up for quite some time. So it moves up from sort of $5.20 up to the sort of $7 mark, or a bit over. And you can see that there's clearly, whenever this indicator comes online or comes into play, there's clearly no debate. The price is actually moving up. And that's a really great advantage to have, because it takes all the emotion and worry out of it. I've had countless new clients come to me before they get into my Enlightened Stock Trader Development Program, and they're holding onto this portfolio that's losing money. And I have a look at the portfolio, and 9 times out of 10, half the stocks or more in the portfolio are moving down strongly. Now, if you only ever held stocks that are moving up in your portfolio, then you're going to make a lot more money than if you keep holding on to trades which are losing. The other trap that a lot of these clients fall into is that they've bought stocks that are low because they think they're a bargain and they should definitely go back up. But the trouble is, this idea of momentum persists in the market. So if something is going up, it'll generally tend to keep going up, at least for a while. And if something is going down, then you generally expect it to keep going down. So on this chart, what we're highlighting is all of the areas where it's clearly going up. Now look at this. Over here on the right hand side, the stock's made a new all-time high. This is in September of 2003. Now, there's plenty of investors and traders out there who would balk at this idea and go, well, I would never buy at a new all-time high because it's already gone up and there's no more room for it to go up further. And you could be forgiven for thinking that way if you look at it all the way over here on the right-hand side of the chart and you couldn't see the future. But here's the reality. If the stock is going up, and we believe in this concept of momentum, which I happen to believe in, look at what can happen, because the size of the moves can be humongous. So this move, it made a new all-time high at about $7.70, by the look of it there. And the move took it all the way up to almost $15, which is a huge profit in anyone's language. And so what this rule does, it's a real simple way of finding moves which are big and allowing you to get into moves which are definitely going up. And that's what you want to do. You want to hold on to stocks which are going up. And if I just keep going along this chart, the same thing happened in late 2006. Made another new all-time high, and then proceeded to move from $16 all the way up to $24. And then obviously the stock started to go down. Now this raises an important point. Obviously this rule is not sufficient on its own. It's no good knowing when to buy a stock if you don't know when to sell it. So there's obviously more to it than that. And one of the other modules in the Enlightened Stock Trader Development Program I go through is all of the different components of a trading system. But if we keep it real simple for the purposes of this video, you need an entry trigger. You need a setup, which is a trend is in place, for instance, and you need an exit rule. Now, this entry trigger of the stock makes a new all-time high, that also serves as a setup because it's clearly trending, and as soon as it makes the new all-time high, we're going to get in. Now, how are you going to get out? How are you going to actually capture the profit somewhere up in this region once the move has happened? Well, that's where we use what's called a trailing stop. So a trailing stop, I'm just going to put one on the chart here for you so you can see an example. Let's use this. So a trailing stop is a price level that moves up underneath the current share price. And if the share price moves down and hits the trailing stop, like it does just here, then that's where you're going to sell. Now this trailing stop is calculated. It's a pretty simple formula, but it's basically the most recent high price minus a certain multiple of volatility of the stock price. So I can explain all that in detail if you're interested. Just shoot me a note and I'll explain in detail how that works. But this is a 6 average true ranges wide trailing stop, and you see the exit point moves up behind the price, and as soon as the trend is over, it starts to come down, hits the trailing stop, and you get out, and that's the profit from. So the profit on this trade was from that level all the way up to this level. So you can see here from about $15.50 up to about $21.50. Now that's a really great trade. Obviously not all trades work out quite so well, but that's an example of how this style of trading can work. Now let's go forward in time a little bit. You can see that this new all-time high generated another reasonably good signal here, and the stock price moved up a couple of dollars from there. This signal was not so good. It hit at at pretty much the high point and then it moved back down, but that's okay. We have some losses as long as we keep them small. And then over here on the right hand side, this is the magic. This is the magic. This is the sort of move that all trend traders dream of catching. And this is one that I rode all the way up, which was just fantastic. So you get in here at a new all-time high of about $38, and the trailing stop wouldn't have got you out until over here at about $180. Now you ride it up, and obviously you have to let the price come down a little bit because it's got to come down and hit your trailing stop sell point. At that point you get out and you bank your profits. It's not impossible to pick the top because you just never know when it's going to be a dip followed by another run up, or it's going to be a full on correction and change in trend. So that's just a very simple explanation of how you can think about making money trend following in stocks, getting in using this really simple indicator and getting out using a trailing stop, which lets you stay in the trend until it's very clearly over. Now what's great is this actually makes money. Is it the best system in the world? No, of course not. There's a few things you can add there to improve the profitability of this quite a bit, but this is a concept that is far better than the way most people who are uninformed or uneducated about trading make their decisions, because this is totally objective. It gets you in and out of the markets without any emotional worries, and it's simple enough to explain to a 6-year-old. So it's very likely that this concept will continue to work into the future. Now, once again, I'm not encouraging you to trade with this method right off the bat. You do need to do some testing and work, and if you need some help with that, then I'd suggest you get in contact with me, and I'll take you through how my programs work and how you can get up to speed on building your own trading system around concepts like this that are really simple, easy to understand and apply, and give you confidence to move in and out of the market and make money consistently into the future. And even more importantly, keep you out of the big down markets that are going to take your wealth away. And that's all for this video. So if you have any questions, shoot me a note or leave a comment and I'll get back to you. And I'll see you in the next video. Bye for now.